Foreign investors will return. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because we're going to have a look at an article from the ABC, which is highlighting the fact that Chinese foreign investors have cooled on Australian properties, but overseas buyers are tipped to return. Foreign investors are tipped to come back. Now, I remember years ago when we'd have clients approach us, builders. We'd be working with builders on looking at trying to get some proposals together for multi-res development projects. Now, some of these projects were entirely dependent on foreign investment, offshore money coming in to fund the entire project. And a lot of the buyers, all foreign. I remember some friends that invested, they'd gone in on a development. And, well, years later, they're still waiting for buyers to buy all the apartments. And the hope was that a lot of the buyers would be from overseas. Now, before we have a look at this article and just a few little things about, well, who's actually investing here in Australia, I want a word from our sponsor, which at the moment is HeiseSays on Twitch. Rachel and I have one show on Twitch we do, and then I have Freedom Fridays. And this coming Friday, we're going to talk about politics, and this is an opportunity for you to call in on the show and have your say and add to the conversation, everyone. It's exclusive to Twitch because I want to have an opportunity to break away from just the Google overlord. Next will be the Amazon. You want both of them, guys. And, Bezos is bald, so he has to be a brilliant man. Now, foreign investors returning and overheating of the market. This is a chart I did some time ago, just looking at the amount of foreign investment. Often, I'll show this chart here, foreign investment in real estate. It crashed. Back in 14, 15, 16, 17, you can see a significant proportion on that, the right-hand side, both sides of the scale. See how that black line is going close to 100%? That's the number of building approvals. FIRB approved investment in new housing as a share of Australian Bureau of Statistics residential building approvals, nearly 100%. And, well, around the same time as that, here's a quote I'll bring up from Matt Barry. 2016, 67% of Australia's GDP came from the cities of Sydney and Melbourne. Now, the small area from Sydney CBD to Macquarie Park is in the middle of apartment building frenzy and alone contributed for 24% of the country's entire GDP growth of 2016. So, I would say that overheated the market. Now, the issue with an overheated market is, well, getting access to labor. Jobs being done too fast, documentation being done as quick as possible, not having enough time to do things properly, and just inability to get resources, supplies. I was on the phone to a concreter the other day, and he had trouble even getting equipment to do his job for particularly the smaller stuff. So this is the problem when it overheats. It can manifest as construction issues. And in some ways, I'd say we're seeing the ramifications of that. Look at all the construction issues in New South Wales. Look at the construction playlist. And I shouldn't just say New South Wales. It's really everywhere. Now, what this chart is showing, this was a response to many people saying that China, it's all this it's anti-China criticism about the Chinese investment in Australia because there were so many other countries investing more. And they were right. Other countries were investing more, like the United States. Look at the amount there, guys. United States, 58,000 million. Then you've got Canada and then Singapore, but China's all the way down here. And this is a clip from a video I did about this. Now, the thing is, what you want to look at the number of approvals. So what's going to make more of a difference to the average punter, say, buying a house or an apartment? Is that a huge Bechtel mine in the middle of nowhere? Help me. Join your coverage. Help us get started. Help us start our practice and start our business. But no, it's going to be the 4,900 over 50%. So 51% of approvals, more if you add Hong Kong. That's for residential projects, guys. Those are for smaller projects. that's going to have an impact on the average punters, I would say. That's going to manifest in the edge cases of real estate, which is going to drive up the prices. Or what do you think would happen? Say, for some reason, we might have a correction in real estate here in Australia. What do you think the government would do? Let's have a look at this article written by Nassim Kadem from ABC. So, Chinese foreign investors have cooled on Australian property, but overseas buyers are tipped to return. So, Chinese foreign investors who abandoned the Australian property market last financial year could soon return, according to real estate agents and analysts who say inquiries and sales are on the rise. But they predict Australian property is likely to be a more attractive option for overseas buyers who want to move here and buy land or large homes with our borders reopened, rather than foreign investors who face high taxes. The Australian Foreign Investment Review Board data shows that amid political tensions with China and COVID lockdowns, investment in Australian real estate from China declined significantly from its peak of almost $32 billion in 15-16 to $7.1 billion in 19-20. Chinese buyers of commercial and residential real estate now sit behind the United States at $13.1 billion and Singapore at $9.5. So here's the top 5 countries investing in Australian real estate. There you go. When Australia's borders open, we will see a flood of people coming back to buy property in Australia, said Monica Tu, founder and director of Black Diamonds Property. Why put the Z on there? Miss Tu's clients are mainly Chinese citizens with Australian residency, working and living abroad. So political tensions dent investment, but people still want to move here. Ms. Tu said, when COVID hit, the political tensions with China rose, investments dipped. But she says now inquiries and sales for $10 million plus homes are back up as foreign buyers with Australian residency seek to return. Previously, probably 90% of our overseas buyers were from China, she said, adding that now they are coming from Singapore, Hong Kong, the United States, and the United Kingdom. Recently, we listed about 29 properties in Sydney, and we sold 27. Ms. Tu says the view of her clients is that Australia managed the pandemic successfully and is a safe place to live. In addition, she notes the exchange rate is currently in their favour. If you look at Australia's prices compared to Japan, to London, to New York, Beijing and Shanghai, we're actually quite reasonable, she said. But some of her clients are placing tentative offers and won't close the deal until borders open and they can return to see the property. If you're going to buy a $20 million, $30 million house, you still want to feel and touch it, right? She asks rhetorically. I don't know. A lot of people seem buying stuff sight unseen seems to be the thing to do. We have good offers, but they are waiting to come back and to settle or to exchange the contract. The next wave of buyers compete for land instead of apartments. In Melbourne's eastern suburb of Box Hill, sales and marketing director CBD Development, Ricky Chen, is seeing inquiries pick up again. The company he works for is behind mixed-use development called Trio, which is scheduled to be built by next year and will include high-rise apartments, hotels, and retail space. Mr. Chen says inquiries from overseas buyers dropped by 70% last financial year, but are on the rise again as foreigners seek to retire in Australia or to send their kids here to study. In February to June this year, we've seen large numbers of inquiries from China, Southeast Asia, and the US market, he said. These buyers, he says, are seeking new, larger-size apartments with easy access to facilities and are turning to Australia, which is seen as a safe place to live. From the view of overseas buyers, they're seeing Australia as the most livable country in the whole world. This is the thing. We don't need to be the best in the world. We just need to be better than all the other countries, everyone. We just need to be better than the other ones, or at least appear better. So let's see what good old Martin has to say. Martin North, principal of property research firm Digital Finance Analytics, also notes there's been a swing away from foreigners looking to invest to people wanting to move here. There are either people returning to live in Australia or coming because of the lifestyle, Mr. North says. Previously, they were after apartments, but now they're more interested in buying land and larger properties, he said. And some of those are intergenerational transactions. In other words, It's not just the two-person family with kids. It's maybe with all the people too, or a group of people buying together. We can see here from Asia, overseas property buyers of Australian real estate. So there you go. There's 2017. That's what we're talking about, the boom. And it's gone down. So now you've got Europeans from America, elsewhere returning, and from Asia. See, if agents and analysts are right in predicting more people will come from overseas to live here once our borders reopen, that will boost competition in an already busy housing market. CoreLogic data shows that Australian house prices have increased by 13.5% over the year to June, led by gains in Darwin, Hobart, Canberra, and Sydney. That's the highest annual growth rate since April 2004. Houses have become more popular with buyers, rising more than 15% compared to units, which increased by 6.8%. Mr. North says this time around the competition for foreign buyers will be for bigger and more expensive homes. A few years ago, there was definitely direct connection between property investment and first-home buyers, he said. This time around, I think the contention is going to be at the top end of the market, large properties with land and standalone houses. But Mr. North doesn't predict the number of foreign buyers will be as strong as they were at the peak in 15-16. I don't see the naked investment we had seen, say, 5 years ago, particularly from the Southeast Asian nations, being the same again, Mr. North said. The world has changed, the political landscape has changed, the financial landscape has changed. Well, here's the consideration to what Martin has said there. While he's right, it has changed, but can we underestimate, is it dangerous to underestimate the will of our political leaders to help property keep going? Would you be surprised if they opened the floodgates, if they created incentives to get people to come here and settle? Our population growth isn't at the level it needs to be. We're not at replacement birth rates. What do you think our pollies are going to do, everyone? What do you think will happen if we start to see more and more property enter the market as the boomers start to downsize? They're hitting 60 soon. The last ones are hitting 60. I know some of them are older. How is that all going to manifest? And there is definitely a move away from apartments to housing. So even if it's at the top quartile, that will tend to filter down to the rest of us lowly plebs. We'll have to see. What do you reckon? As always, thanks for watching. Like, share, subscribe to the channel. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan and enjoy the content I create here, there are a few ways you can support us. Join us on YouTube or Patreon. Sign up and watch us on Twitch. Use SelfWealth or Stake. Buy a merch from HeiseSays. Use Gold Pass from the Perth Mint or our affiliates links at Amazon, eBay, Independent Reserve, or AussieBroadband. See you, everyone. Have a great day and take care.